What's up, guys? Welcome to the Momentum Trading Lab. Please remember to hit that like and subscribe, and let's get into it. Right, so before we have a look at the charts, let's first have a look at the economic calendar for the upcoming week. So tomorrow there's nothing to take note of, and then on Tuesday this is just low impact news events, so really not much to worry about. But then on Wednesday we have the CPI numbers coming out at 8:30 New York time. So personally, my plan normally is just to wait until 10 o'clock. So yes, there might be some nice volatility, but this is still going to be a highly liquid day. So I just wait kind of until 10 o'clock. Then I know most of the manipulation has already taken place, and normally then during 10 o'clock is when you see the real move occur in the futures market. So that's going to be my personal plan for Wednesday. And then the same for Thursday. We have the high impact news coming out at 8:30. So I'm just going to be waiting until 10 o'clock. So normally at 10 o'clock is when the distribution leg of a market maker buy or sell model occurs. So by 10 o'clock, all of the manipulation should be out of the market. And then you can just ride that distribution leg into a pool of liquidity. Then at 10 o'clock, this is just low impact news events, so we are not going to worry about that too much. And then on Friday, we have high impact news at 8:30 again, and then at 10 a.m. as well. But I just play this the silver bullet at 10 a.m., but not immediately. So obviously at 10 a.m. there will be an injection of volatility, and then you just kind of wait for price action to take out a liquidity pool. Wait for the displacement with the fair value gap, and that will basically be your entry, and then you will just ride it to the next opposing liquidity pool. All right, so should see some nice volatile action during this upcoming week. So let's start our analysis today on the dollar index and on the daily chart. So I'm going to clean everything up. We just have to remember this is going to be a critical level. If we break through this level, which was this little volume imbalance on the daily chart, the next level is going to be these relative equal highs right here. But with that being said, let's clean everything off the chart. Just one thing to take note of is this bearish divergence on the daily chart. So we are at a critical level and printing the bearish divergence. So this could be an indication that we see a bit of a down leg during this upcoming week. We also have these fair value gaps right here. Like that gray. Fair value gap. So we came from sell side, right? So we had a low right there. Then the low got violated, but did not displace below the low. It displays to the upside, telling us that a larger player bought up all of these stops located below this low. And then price went up, and they had the opportunity to pair their long positions with the buy stops above these highs and above this high. So we had these relative equal highs. So this was the draw on liquidity a week ago. We posted those charts in the Discord, and then we came straight into these liquidity pools. So it seems likely, just looking at the price with the imbalances to the downside, we took out the liquidity, and we have a bearish divergence printing on the RSI, and we can also see that divergence on the Williams as well. So on price action we have higher highs, but on the oscillators we have a high and a lower high. Make that red. You can see it's going down, and then the same with the Williams, which is our strength indication, also moving to the downside. Okay, let's get a Fibonacci on this. Okay, so for this little not little, but this leg to the upside, if we pull our fib from this low to the high, then we have this fair value gap right in between the equilibrium and the Fibonacci 618. So it seems likely the dollar index could see a move down to around 103.885 more or less. That will kind of be the midpoint of the fair value gap, before then making another push to the upside towards the next liquidity pool, which will be right here at 105.883. So the dollar index is still in bullish market structure on the daily chart, so we should kind of assume that it's going to continue to the upside until it takes out old low but displaces below it. Not like this was just a clear liquidity raid. You will know it's a market structure shift if we displace below a low, so create a bearish fair value gap below one of these old lows. That will tell you that we are shifting market structure. But when it's something like this where we just kind of tap below this low, that's your indication that this was just a liquidity rate of the sell side liquidity. And we'll just mark that off as SSL, sell side liquidity. Okay, so it looks like the dollar wants to just come back into a discount, rebalance these inefficiencies in the chart, and then continue the push to the upside. So with the next liquidity pool being right there at 105.883, that level also aligns nicely with this Fibonacci extension level of -0.27. Let's switch off the other ones. Okay, so this is our relative equal highs right there. And that's our relative equal highs. So this is the indication of the buy side liquidity. Okay, so it looks like for this week we'll see this little push to the downside. Yeah, let's quickly have a look at the 4-hour. Before I do that, I just want to post this chart in the Discord before I forget. I want to clean this up a little bit. Okay, so we are gonna say that the draw on liquidity for the upcoming week for the dollar index is at least going to be into this fair value gap. So this is the likely draw on liquidity. And you'll see once we go to the Nasdaq and ES1 chart, it will also provide additional confluence that the dollar index might see a bit of a leg down during this upcoming week. Okay, let's label this as well. Because if you're on the Discord, you can grab the chart under my channel. We are gonna say this is the Dixie draw on liquidity for the upcoming week. Okay, so we know of that volume imbalance. It seems likely the draw is going to be to the downside. But if during the first couple of days of the upcoming week, if we break through this volume imbalance, this one that we are finding a little bit of resistance at, then we will probably see an aggressive little push to the buy side liquidity above these equal highs at 105.883. Okay, let's have a look at the 4-hour. just remove these things from the daily chart. Okay, let's just first look at the price action. Okay, so definitely on the 4 hour, it also looks like there's the potential of a bunch of liquidity being built up below these levels. So we have these equal lows right here. So we will have buy side liquidity in this below these lows. So I'm just going to mark off this level. So as soon as we get price action to move into this level, then we want to take note of that and see how price action rejects. Is it just tapping into it to stop out the longs before continuing higher, or are we displacing below it? And that will be your indication of bearish order flow. Then we could see lower prices for the Dixie and higher prices for the risk on assets. And then the same right here. Okay, so now just looking at the daily with those imbalances got rejected at that imbalance, it seems likely that we'll have to come back into a discount. And now also observing the 4 hour, we can see that there's liquidity built up below these lows. And then we also have a nice low right there. Okay, so that's all of our internal sell side liquidity for the dollar index. And could that little rejection above this high, could that be the final liquidity rate before the move to the downside? Or could we see another little stab into that area before continuing down? So that's some things we'll have to observe during the upcoming week. All right, so if you are bullish on the risk on assets during the week, we want to see some aggressive displacement below this low. If we just tap into it and displace to the upside, then it's likely we are moving to 105.883 to go and dig into the liquidity right there. So just take note of how price interacts with this low once we get there. So look at the momentum master. Okay, a little bit indecisive. The Williams is getting topped out. The stochastics is low, but it's still pointing to the downside. MACD is pointing down. Bearish divergence is pointing down. So actually, most of the things are pointing down. And then we have the bearish divergence on the daily. So you have to say that the 4 hour is looking kind of bearish as well. And then also just with the observation of the price action, just that little high, that stab above that high tells me that that could have just been a liquidity grab. And we know there's always a reversal after these major liquidity grabs. Look at the 1 hour. 1 hour is also looking bearish on the momentum master. All of the oscillators are overbought or pointing to the downside. Okay, let's see. Okay, so it looks like this bearish fair value gap has been flipped into an inversion fair value gap. And then price action also took out these lows, but did not displace below them. Just tapped into it, and then the displacement was to the upside. You can see there's a small little fair value gap, but it's still there. So it's still considered displacement. Small, but it's still there. Okay, so now looking at the 1 hour, it looks like there will be a high likelihood of Just a push to knock out the last short buy stops before they push it to the downside. Potentially something like this. Knock out all of the buy stops, and then it will potentially see its move to the downside. Have a look at the 15. Okay, so the 15 is starting to reset. Stochastics is resetting. The Williams still has a little bit left to go. So then it could just build up a little bit of momentum to knock out these guys and then make its move to the downside. Okay, so just to summarize the analysis on the Dixie, we kind of have to be short-term bearish on the Dixie, meaning it will just kind of retrace into one of these imbalances and then likely continue to the upside. So short-term bearish, but longer-term bullish on the dollar index. All right, I think we are ready to proceed to the Nasdaq. So I'm going to use the NQU chart. The perpetual chart is doing some strange things with the upcoming contract changeover. So let's just use the NQU September contract chart. Okay, so the Nasdaq had this nice move to the upside, took out the buy side liquidity above this high and this high, then started to move to the downside into this daily bullish fair value gap. And I believe it also came into the discount area. Get the Fibonacci. You see it just stabbed into the discount area. The first extension level takes us right to that high. And then we have a volume imbalance. Relative equal highs. So bolt up, we can assume there's going to be buy stop liquidity above these highs. No imbalances below. Okay, so we just have to be aware that the sell side is building up below these lows. So at some point, they will come for this. Okay, so then just taking what we've already discussed on the dollar index, and now looking at the Nasdaq, we came into a discount after taking out buy side on the daily chart. So we had a low and a high. There was a little high right there. All right, so this was a bearish market structure. And now we broke into a bullish market structure, making higher highs and higher lows. So it seems likely that we, during the course of this week, expand into this area. We also have these equal highs right here. So to me, the daily chart conveys that the drawn liquidity for the week is going to be to the upside, just because we have equal highs. So liquidity right here, a volume imbalance, and then more liquidity right here. And then we are in a bullish market structure, going back into the discount. So it seems, to me, it seems more likely that we get an expansion to the upside during the course of this week. Have a look at the momentum master. Where did it go? Switch off the Optima. Okay, so on the momentum master, it looks like it still wants to come to the downside, but let's have a closer look at the Williams. So in my experience, the Williams normally likes to do like a double top before it comes down. So this little push, the last little push on the Williams could see us take out these highs and the volume imbalance, and then get another retrace, and then maybe eventually taking out these highs. So just looking at the oscillator, it seems that it still has momentum left to go and take out these highs, still in the volume imbalance, then maybe retrace for another higher low, and then get another push to the upside. And that's the daily. Let's have a look at the 4 hour. So price also came and reclaimed this imbalance. Okay, I'm just dig through it. There's something interesting to note. So let's just kind of click right now. So let's have a look at how the dollar index looks right now with the price action. Go back to Nasdaq. Okay, so just look at this price action, right? Just this spot. This looks a lot like how the 60 looks right now. So what happened after the Nasdaq printed that structure? It got this move to the downside. So it looks like this is almost like a fractal between the dollar index and the Nasdaq. So that's also some additional confluence that we could see the dollar index move down during the course of this week, just because of this kind of fractal between the Nasdaq and the dollar index. Just noticed that now on the stream. All right, and then we obviously came down, broke into a bearish market structure on the 4 hour. However, we have another imbalance right here that will act as a magnet for price action. Okay, no major, there's no imbalances right here except for the one that is already reclaimed. Then we have an untouched one right here. Get a fib on this leg up. Okay, it's the same as what it was on the daily. Just dig into the discount area. Okay, so this is the very last lower high. So we want to see an aggressive move above this high. Push through this fair value gap. Then turn this into an inversion fair value gap. And move towards that volume imbalance. The midpoint of that imbalance is at 15,785. So that kind of seems likely, a likely scenario that we could see play out during the course of the week. Relative equal highs right there as well. Okay, so the daily and the 4 hour definitely tells a story of higher prices during the week for the Nasdaq and lower prices for the dollar index. This isn't the most bullish sign. Just you get a push up on the stochastics, but not a major push up on price action. The Williams is kind of pointing down. Okay, so this is a little bit indecisive, but this just tells me that there might be just some manipulation, knock out some of these lows, and then get the displacement to the upside. They will just have to knock out some liquidity so they can fund the journey to the upside. One imbalance right here on the 1 hour that's been unclaimed. Okay, so could we first see all right, so we came above this high, didn't displace above it, so this could have been them knocking out anyone that trialed their stop losses to this high. We'll have to see when the market opens. So this will be your market structure shift. Okay, so this is gonna tell us a lot. Once the market opens, are we gonna push above this high with displacement? Then it's likely we are going straight to this area. Or could they flip the market structure with displacement and then first go and rebalance this area before we see the move to the upside? I'm not sure yet. We'll see how price action handles these two levels, this high and this low. So if we get the displacement aggressively above this high, that tells me that they want to go and grab the liquidity and rebalance the imbalance right there. But if we get the displacement below this low, then we are first probably coming down to rebalance this area and then getting the push to the upside. That's something to look out for. A 15-minute chart. Bit of displacement. You had bearish market structure, then took out that high with displacement. Okay, the 15-minute kind of tells me that 1 hour imbalance is gonna stay there for a little bit. Almost looks like it wants to come down just into this gap, into the OTE, and then move towards that level. 15-minute also just wants to cool down on the momentum master. Quickly go back to the 1 hour. Yeah, so just kind of to summarize, so on the daily, we are more bullish because we came into a discount, rebalance this area, bullish market structure on the daily. The dollar index is looking slightly bearish. 4 hours a little bit indecisive, as well as the 1 hour, but the 15-minute, this is giving a better read on the structure. So this looks like it was just a retrace into the OTE. We came exactly to the Fibonacci 786, then broke into bullish market structure. At displacement that created a fair value gap. Needs to cool off a little bit on the momentum master B. Seems likely a retrace into this area, then getting the move to the upside. So I think that 1 hour will get reclaimed at a later point of time. All right, I think that concludes my analysis for the Nasdaq. Let's have a quick look at ES1. All right, sorry about that. Okay, so ES1 is going to be very similar to the Nasdaq. So it came into a pool of liquidity. You can see with this wick, didn't displace below it. Rather, it started to aggressively move away. Broke into bullish market structure. See, also came into a discount. On ES it touched that 618 almost exactly. Make this gray. Okay, so also took out an high, then retraced into the fair value gap. We also have a volume imbalance right there, with the buy side at 4,634. Okay, so this will be the same idea as the Nasdaq. To me right now, it looks like the draw on liquidity is going to be to the upside towards this high and the volume imbalance. The midpoint of this imbalance is at 4,589. This high we have at 4,547. That extension will dig us right into the volume imbalance. And then the golden pocket extension right into the liquidity above that high. Go to the 4 hour. The 4 hour on the oscillator looks pretty bearish. So you have the push to the upside, but price action didn't really give you any significant moves to the upside. So that kind of tells me that we will see some sort of manipulation to grab some of the sell side liquidity before getting the move to the upside. Interesting. Here we have a fair value gap that it struggled with, but right here we had a low, a lower low, then a slight higher high with a higher low, higher high, higher low. Then on the 15-minute on the Nasdaq is where we got the clue. So this also looks like a 786 bounce. Almost exactly 786 bounce. So now we are just going to use this fib. Okay, I can see on the momentum master it also needs to cool off a little bit. We could get this retracement into this gap, into a discount. So then what you can do is, as soon as we get into this area, you move to the 2 or the 1 minute and you look for that bullish market structure shift with displacement, and then you just enter on the retrace, and then you can run it to an opposing liquidity pool. You go back to the Nasdaq. So from the 618 to that high, that's about 105 points. That will be a pretty sweet trade. And for ES1, on ES1, 20 points, that's pretty good with that big multiplier. 50, basically $50 per point. Alright, so that's basically ES is doing the same as the Nasdaq. Have a quick look at Bitcoin. So we nailed this little move to the upside. This little hit towards the equilibrium. So I still believe they are going to move it towards these lows. Knock out all of the long stops right there. But we do have this fair value gap right here. And then you can see there's almost a bit of a fractal going on. Relative equal highs. So have a look what we had right here. We had this strong displacement down. bearish fair value gap with relative equal highs right below it. They stabbed into it. Now again, bearish order flow, bearish fair value gap with relative equal highs right there. So it seems likely they stab it. Exactly as what they did here. Just into that box, into the fair value gap, into the equilibrium, and then get that move into the sell side liquidity. So that's basically it. We don't really even have to go to the lower time frames on Bitcoin because there is barely any liquidity. So there is really no use, in my opinion, to look even at the 15-minute. It's fine just staying on the 4-hour and the daily, seeing that the movement is so painfully slow. But that's what I see happening, is just pushing it above these local equal highs, repricing the gap into a premium, and then taking out the sell side liquidity below 25,300 more or less. All right, that's basically my quick pre-market analysis. I'll be back during the New York lunchtime session to do an update right before the afternoon session, do a quick recap of what happened in the morning, and see if we are still on track with the initial projections for the week. And with that being said, thank you guys for tuning in today, and I'll see you guys either in the Discord or on the stream tomorrow. Cheers.